by Maria Bartiromo and Stuart Varney and Lou Dobbs and Charlie Gasparino. Lou, they didn't move as you predicted, but there's a confusion in the markets as to whether that's a good or bad thing.
Well, and that is the stuff of which markets are made, as we all know. I think this is a perfectly healthy response here. And I think, importantly, we talk about the box that they put themselves in. Yellen has put herself in. I think this was a decision, or if you prefer, a non-decision, that goes a long way toward extricating them from that box. Because this suggests those metrics actually do mean something, that they do have greater clarity than it would have been suggested had they raised rates in the face of what are significant cross-currents in the economy. I think Yellen did the right thing. I think that the Federal Open Market Committee did the right thing, and I think you're going to see this as a positive for their credibility.
Well, it's still very, very early. It's swinging very, very wildly here. But Stuart Varney,
it's only 4 minutes. Come on.
Exactly. But we're going to be all over the map. But it's safe to say, because what they will read the decision about 500,000 times, right?
Yeah. Now, the tea leaf readers are now looking very closely at that statement, parsing every single word, every single comma, every single sentence.
Should have been an N or the.
What does she really mean by that? I mean, that's what they're doing at the moment. And as the verdict comes in one way or the other, the market goes up and
if
down.
The market is plummeting, if the market goes down, the immediate fear, Maria, to your point, is that they missed an opportunity to be on top of this, and there's going to be hell to pay, right?
Well, look, now we know what the Federal Reserve thinks of the economy and what's on the horizon, what's around the corner. For now. Now we know that the Federal Reserve is afraid of what's happening internationally and its impact on the U.S., is afraid of the fact that we have seen the participation rate continue to drop in terms of employment, and that the industrial side of the economy is weak. The question for the markets now, what are the alternatives? Okay, so we're lower for longer on interest rates. What does that tell you? Everyone's going to continue this search for yield, and the yield can only be found in companies that pay dividends and are seeing growth. Stock market will go higher.
A paragraph of the Fed's statement was devoted to all these foreign developments.
They're scared to death. They mention the foreign economies. They mention our markets. You can't move up because of the state of the world economy and the state of our markets. They're still in that corner.
Well, if you're Christine Lagarde, you're the World Bank, Maria, you must be liking it. You must be liking it because they told you not to move.
Listen, I think this is a very dumb move by the Federal Reserve. 25 basis points would not matter. And what they've done is basically said, you know, without like the Chinese stimulus really seeping into our GDP, into the economic numbers, they basically said right now, if you're an investor and look at the market right now, because the market's agreeing with what I said before. No, you got to look at these things, because this is what they're saying.
Complete reversal.
They're saying that our economy
with 2 hours
stinks.
to go. With 2 hours to go.